this morning, and I've picked a couple of stocks that are going to be positive at the start, I think. One of them is HDFC Life, and we've spoken about the challenging environment for the life insurers, and a lot of people have spoken about the fourth quarter being a little challenging for them because of a lot of changes in the way that these products are sold. But HDFC Life had a solid quarter. The value of new business growth was better than expected, and that's on the back of a lower annual premium equivalent growth as well. But margins have come in much higher than expected. I'm talking about the VNB margins, the value of new business margins. They've come in at over 26%, and this was higher than expected. That's because of an improving mix. And that mix is essentially because of unit-linked insurance products, which saw a strong growth in the quarter gone by. Annuity products, on the other hand, did not grow as fast. And that mix improving is what has contributed to an expansion in the margins. So watch out for this at the start, certainly something to track. CEAT is a negative because there was expected to be pressure on margins, but to the extent that you saw pretty sharp contraction in the EBITDA margins, coming in at 10.3% in the quarter gone by versus 14.1% in the comparable quarter. Net profit as a result of which has fallen quite dramatically, 46.5% decline in the quarter gone by at 97 crore rupees, and that's not going to be a good look for the stock at the start, perhaps. Again, the last stock is a positive. Rail Vikas Nigam, another order coming through. This one to the tune of 3,622 crore rupees from BSNL for the development of the middle line network for BharatNet. And this is something that reacts usually to contract wins and to order wins, so something that you should keep on your radar, guys.
Right. Well, I have two earnings from the technology space on my radar this morning, and the first one is LTTS. Earnings have been more or less in line, if not a slight miss per consensus expectations. But in terms of the management commentary and what's been spoken about from analysts on the street, it does look slightly better off as compared to what we saw back in the second quarter in terms of what we could potentially expect moving in. Now, as far as sequential growth is concerned for revenues, we've seen a growth of around 3.1%. Do remember, this is for a quarter which has a lot of furloughs. So it's not exactly been a bad quarter given the kind of traction that we've seen in business. Margins coming in also at around 15.9%, and we've seen an expansion, sequential expansion in margins too, and the margins are slightly ahead of street expectations. Net profit remains flat around 320 crores, and in constant currency growth, we are looking at a sequential growth of around 3.1% as well, and 8.7% year-on-year growth, which is why at the moment analysts in general are a tad bit more bullish as compared to what they were back in the second quarter. Next up is OFSS, or Oracle Financial Services, and this is where we've seen a little bit of disappointment come through. Now, this is a product company, so this can also be assessed using the year-on-year way of looking at things, but I'm going to first talk about sequential. Revenue growth of around 2.5%, but margins have come off sequentially as well at around 40.6% against 43.8%. So that's a significant contraction in your EBIT margins. Net profit consequently has come off around 6.3% for Oracle Financial Services. And while there has been a miss, the street is still bullish on the fact that it has a pretty good deal pipeline going in, as well as plenty of orders which will eventually show up in terms of its top line and the bottom line. And that's why the street is not completely negative. And do remember, OFSS has seen a significant drop from its life highs recently. And the final stock on my radar is Azad Engineering. This is on a 960 crore order from GE Vernova International US, which is why we could potentially see a green tick here as well.
Yep. I believe HDFC Life is yet to be spoken about. You've taken it, right? So that could be a really interesting one for sure. A couple of other earnings, right? Aeroflex Industry, I thought the numbers stood out. It's a small name, of course, but what was very well subscribed, the IPO, I remember. Now, revenues were up 36% at 100 crores versus 73 crores. Margins are at 21.64 versus 18.85, and net profit up 68% at 15 crores versus 9 crores. A big thumbs up to this one. You will very likely see this stock reacting positively, so watch out for that. Punjab and Sindh Bank. I know Vishwanath is going to come up in a moment. Maybe we'll ask him about bank numbers as well, or maybe Harsh can come in later on. But decent numbers, I thought. NII up 27% at 939 versus 739. Gross NPAs come off QOQ at 3.83 versus 4.21. Net profit up 147% at 282 versus 114. Couldn't find too many faults with this, so keep an eye out for that. And then from amongst newsmakers, I think GAIL is in focus. Now, the impact may not be too much, about a couple of percentage points, but it may react. So I just want to mark it because GAIL and CEFE arbitration has been settled. It's a marginal positive. CEFE will pay, or SCFE will pay about $285 million, which is about 2,500 crores to GAIL. And that kind of comes to about 2% of GAIL's market cap. So expect maybe a little bit of a reaction to GAIL as well. And then there are a clutch of other brokerage notes, which we will talk about during the course of the day. There is a UBS on telecom, there's a CLSA on Zomato, there is a DAM Capital on Orient Pro, amongst others. So all of these will come during the course of the show. But these are the top 9 between the three of us that we thought should be marked for sure. Now,